Good afternoon and welcome to the TRUFIN PLC final results investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged, can be submitted any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to James Vandenberg, CEO. Good afternoon.
Good afternoon. Thanks for that introduction. I'm assuming everyone can hear me. It says now broadcasting. Great. Yeah. So thanks everyone for joining us today. My name is James Vandenberg. I'm the CEO of TRUFIN. Today I'm going to give you a 20-30 minute presentation on our results, and then going to open up for questions. So TRUFIN. So TRUFIN is a holding company. We've got 3 subsidiaries: Oxygen, Citago, and Playstack, and we've got 191 people across 5 offices that operate within our group. Oxygen Finance, on the left-hand side. Oxygen Finance is the #1 provider of early payment programs in the UK. It provides other data services to a client base as well, and it's got a fantastic client base. It's got incredible visibility of earnings, and we co-own this business with management. Citago supports over 1,000 SMEs with credit control tools, and it also offers mission-critical infrastructure to banks. Its first 2 partnerships were with FTSE 100 companies, Lloyds and Sage, and it's got an exceptional pipeline of blue-chip clients. Yesterday, in fact, we announced we won Bank of Ireland, which I'll go into more detail later. Again, we own this business with management, and the other external shareholder is Lloyds Bank themselves. Finally, we own Playstack. Playstack is a tech-led games publishing business. It reached EBITDA profitability last year. It's growing its back book of revenue, and it's got a fabulous pipeline of games launch this year and next, and in 2026. So that business will be, or targeting, I think is the legal term, targeting EBITDA and bottom line profitability this year. And on the right hand side, you can see that we owned Virtus, which we successfully sold in October last year. So we no longer have a stake in that business. So on to our results. So on the top left, the top section, this bit you know about anyway, but to give you a quick rundown, we grew revenue by 34% to 20.5 million. Gross margins of 72%. That's definitely not a ceiling, so that number can go higher. And loss before tax, which we're very focused on, loss before tax improved throughout the year, and we're very focused on that number going forward. We can expect that number to improve in the coming years. Cash, we've got more cash than we need to reach group profitability. I think the second section is the bit that's new as of today. So that's really what we've been up to this year. So we've grown 271% year on year. So we've had a fantastic start to the year. Within that, Oxygen grew revenue by 35%. Citago yesterday delivered its second tier 1 bank contract with Bank of Ireland, which is a fantastic achievement. And Playstack has sold more than 1 million units of its latest game, Balatro. So again, to put that into context, that game was launched on February the 20th. So in less than 30 days, it sold 1 million units. So a fantastic achievement and a fantastic start to the year for TRUFIN. So going on to Oxygen. So Oxygen, why do we love this business? So Oxygen is #1 in its space. It's got 58 early payment clients. It accelerates payments to over 20,000 suppliers. So that's up from 10,000 suppliers last year. It's doubled year on year. And to put that into context, last month alone, it processed over 26,000 rebates for our clients' suppliers. So our clients are the large local authorities, large buyers. They have suppliers as their clients, and we process rebates on their behalf. So we process 26,000 rebates for suppliers up and down this country. Secondly, the quality of its pipeline. we've got 58 clients today, but we've got over 100 clients in the pipeline. So we've got many years of growth. And that's not a speculative pipeline, that's a very advanced pipeline. It's the largest pipeline we've ever had. And finally, revenue visibility. So the revenue visibility of this business is second to none. Auction signs 5-year contracts with their clients, and on average, over 90% of contracts renew for another 5 years. So you can see the sort of visibility we have on revenue is phenomenal. And if you look at the bottom right-hand graph, which is a graph we show our investors every time we present, you can see that over 87% of expected revenue in the coming 4 years is from clients we've already signed. So again, put that in context. If we didn't sign another client as of today, 87% of the next 4 years' revenue is in the bag already. So it's the sort of business anyone would want to own. And we're not the only ones to love this business. We got a bid for it in December 2022, £26 million. And at the time, the revenue of the business was 5.2 million. It was doing EBITDA of 1.1, so that's the 2022 numbers. And since then, every single metric, financial and non-financial, has improved. The suppliers have doubled, as I said, to 20,000. We acquired an integrated bid stats, which is the #1 tender portal for SMEs in the UK. And revenue and EBITDA and cash generation have also grown and improved significantly since that bid. So every single metric has improved since the £26 million bid. Shareholders and the board rejected the bid, and they were absolutely right to do so. And we don't believe that will be the last bid for this business. Satago. So Satago, what surprised us last year? Last year, subscriber growth was over 100%. And that's paid subscribers. So that is set to continue this year and next. So that was a fantastic achievement. Also, the size of the pipeline. So we've already secured Lloyd's, we've already secured Sage, again, 2 FTSE 100 companies, which is an extraordinary achievement for such a small business. But the pipeline exploded last year in a good way. My son tells me exploded now is a good thing rather than a bad thing. So it exploded in a good way. And the size of the firms in the pipeline they're the largest banks in the world, tier 1 banks, tier 1, tier 2, tier 3 banks, challenger banks across the board, across the globe. So the size of firms in the pipeline is fantastic, and the number of firms in the pipeline has also never been higher. So it's a really encouraging position for this business to be. I mean, it's obviously worth saying that enterprise sales takes time. Sales cycles are long. Client onboarding takes time. But as my mother says, good things come to those that wait. So Satago is got real momentum at the moment. As I say, won Bank of Ireland yesterday. It's first tier 1 bank outside the UK, and it's still targeting 50,000 clients, which will put it in an extremely strong position. Both as a position in this marketplace and a phenomenal financial position and outcome for shareholders when we get there. So PlayStack. I guess the question is, why are we excited about PlayStack? And the first thing to say is last year, PlayStack recorded £8 million of revenue. And on that revenue, it turned EBITDA profitable. So we've got 6 games launching this year. I suspect many of you have heard about a game called Bellatra that was launched in February, I mentioned earlier. So imagine what the EBITDA is going to do, when you've got 6 games launching, one of which has been our fastest selling game. So in that respect, it's in a phenomenal position. We also sold Interact. So today we announced the sale of Interact, an ad tech business we owned. We sold it for $2 million. And that was valued on our balance sheet at 0. So another really good outcome for shareholders. And finally, Bellatra. Bellatra is a card game. As I said earlier, it's been our most profitable game in history. It's sold much more than I can't tell you the exact number, but many more than 1 million units so far this year. And it's got, that was in the first 36 days. So in the first 36 days, it sold sold significantly more than 1 million units. Imagine what it's going to do over the next 5 years. So it's very exciting times for this business, and we've got a further 5 games launching this year. But I think it's worth saying, importantly, before we launched Balatro, we were very confident on PlayStack. So why is that? This graph is a little busy, but hopefully you can hopefully by the end of the slide you'll see why we're so keen on PlayStack. So on the top left-hand side, so on the graphs on the left are the games that PlayStack have launched, the first 8 games. We've launched many more games than this, but we don't have room for all of them. The first game, the top left-hand game, is the first game we launched, and the purple dot is the total amount of external investment that we put into this game. So if you add up the developer advances, the marketing costs, the localization, the translation, etc., all the external costs that PlayStack makes into a game, the purple dot shows that investment. The green line is the total revenue of the game. So once the green line is above the purple dot, we're making money. We've returned our investment and we're making money. And so you can see the different profile for different games. Every game is a slightly different profile. And if you take all these games collectively, the games we've launched, this excludes Balatro, which obviously has been our most profitable game. But if you take all the games we've launched inception state, so there's no cherry picking here, our hit ratio, so that's the number of games that make their investment back. So the hit ratio is over 90%. The return on invested capital, so the purple dot, the return we get in excess of that is 380%. And the IRR is over 300%. So these are obviously phenomenal numbers. To put that into context, I've been investing in businesses for 23 years across private equity, hedge fund, VC, and I've never seen such stats. To have a hit ratio over 90% and a return on invested capital of over 300% is extraordinary. And if you exclude Mortal Shell, which is our largest game, the return on invested capital is still over 90%. The IRR is still over 200%. And this is pre the launch of Balatro. So these stats here are what gave us confidence as a company, and I think should give every shareholder confidence in what PlayStack is doing. It's very much a data-led driven business. On the right-hand side, you'll see the number of games we launched. So this is the revenue split by game. So in 2021, we had 4 games. The big green section of the pie is obviously Mortal Shell. And at the time, 5% of our revenue was from the back book, and that's games launched prior to the beginning of the year. So we were very concentrated then. We're obviously a lot more diversified now. So in 2023, we generated revenue from 15 games, and more than 35% of our revenue was from the back book. So again, similarly to Oxygen, if in 2023 we hadn't launched another game, 35% of the revenue we achieved was from games launched in the prior year. So all these 15 games that we generated revenue from last year are clearly going to contribute to revenue in 2024. So the back book in 2024 is going to be higher than 35%. We've got a further 6. We've got 6 games launching this year, the first of which was Balatro. So all these stats are going to look better in next year. They're looking fantastic already, but they're going to look better next year. So I think to summarize, PlayStack has got a repeatable, highly scalable process. It sources, publishes, and distributes games, and the results are exceptional returns on invested capital. So that is why we're so excited and confident in PlayStack. So to summarize TRUFIN, Oxygen was bid for already. Since then, every single financial and non-financial metric has improved considerably. Satago, yesterday it signed its second tier 1 bank. It's creating serious shareholder value, and the team, Sinead and her team, are doing a phenomenal job. And PlayStack, EBITDA and PBT profitability, our target is on track. Again, a lawyer's drafted that. So we're on track for EBITDA and PBT profitability in 2024, and there's obviously an awful lot more to come. So hopefully that gives everyone a good overview of TRUFIN, why we're excited. We grew over 271% at the start of this year. We couldn't have had a better start to the year, and we're all very excited about what we can create for you, our shareholders, in the years to come. So with that, hopefully, I can.
We can go to questions, James.
Go to questions, yeah.
Fantastic, James. Look, thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions just using the Q&A tab situated on the right-hand corner of the screen. Just thought James takes a few moments to review those questions submitted today. I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. James, as you can see, if you just click on that Q&A tab, we've had a number of questions received throughout today's presentation. Thank you to all the investors for submitting those. May I ask you just to start at the top and just where appropriate to do so, read out the question and give you a response, and I'll catch up with you at the end.
Yep, certainly. So question from Alex C. Given the revenue growth experienced in early 24, what's been the key driver in delivering this, and can this be sustained while balancing growth and profitability? So we've seen growth across the group, both from Oxygen, Citago and Playstack. Clearly, as mentioned, the launch of Balatro has been, and we write in our RNS, was a fantastic boost to numbers. March is also going extremely well, I'm very pleased to say. Can we direct answer to your question, can this be sustained? If we thought we could maintain 270% growth, we'd be absolutely thrilled. That's quite ambitious, but can we sustain very, very pleasing growth this year? Absolutely. And in future years, absolutely. And profitability, absolutely. Jeremy, given the good news so far this year, can we expect to see upgrades imminently? Well, Jeremy, as you know, I can't possibly comment on that, but I think it'd be fair to say that the analyst, who, by the way, Nick Anderson, who's an exceptional analyst and is sadly leaving Liberum this year, Nick Anderson won't be very stressed with his numbers at the moment. I think he'll be sleeping soundly with where his numbers are, but at the moment we won't be upgrading our numbers. The strategic move towards recurring revenue, how do you see this increasing and adding to future performance? From Simon. Yeah, Simon, so one of the reasons we sold Vertis is because Vertis was a lending business, and there was no recurring fee income, and we very much transitioned away, intentionally transitioned towards recurring revenue. So we see this increasing over time. We have a lending book within Citago. That's a fantastic marketing tool for Citago when it shows tier 1, tier 2 and other banks how the process for lending, the rigor with which it does it, etc. So it's likely we'll always maintain a small lending book, but we should increasingly move our recurring income and fee income towards 100%. So yeah, we see that increasing over time. So are there any specific milestones that we should look for this year, and what is the long-term ambition across the group? Will you look to sell and redeploy capital in new opportunities? So long-term ambitions for the group is to make money for our shareholders. That is our ambition. We, as you can see from our website, we buy businesses, we improve them, we get them to profitability, and then we're going to look to sell them. So that's the stated plan. And in terms of redeployment, we haven't come out with what our strategic decision is on that at the moment. But historically, we've given capital back to shareholders. So you'll read into that what you will, Simon. I think that one's not for me. From George. I think, George, you might be on the wrong chat room. Yeah, so that's the end of the questions. Yeah.
I think you've covered off all those questions from investors, so thank you very much indeed for that. And of course, any further questions that do come through, you will have the ability to review those, and we'll publish responses on the Investor Meet Company platform. James, just before redirecting investors to provide you with their feedback, which I know is particularly important to you and the company, if I could just ask you just for a few closing comments, please.
Yes, well, thank you all for joining in your time and your interest in TRUFIN. You know, we're a bit different, we think a bit special, but certainly different. And yeah, it's I think when businesses have momentum, one way or the other, it's quite hard to shift that momentum. And so a business that has downward momentum, it's very hard to turn and to turn that. And similarly, you know, we have got fantastic forward momentum, and we intend to maintain that momentum.
Fantastic, James. Thank you indeed for updating investors today. Could I please ask investors not to close the session, as you now be automatically redirected to provide your feedback in order that management can understand your views and expectations. This will only take a few moments to complete and I know is greatly valued by the company. On behalf of James and TRUFIN PLC, we'd like to thank you for attending today's session. That concludes today's presentation, and good afternoon to you all.
Thank you.